Welcome back to Watching Business Incorporated here on Channels Television, and it's celebration sort of in the United States with that deal that has been reached about the U.S. debt ceiling or limit. Now it's been extended, and so the U.S. has gone past that risk of default. But what does it mean for African countries, especially those, almost all of the African countries, emerging economies, do service their debts? And then we just told you about Kenya getting new loans from the World Bank, and all of this is serviced within dollars. What does it mean for them? Well, let's talk to Matt Kinniger now, joining us to discuss this. Hi, Matt. Good afternoon.
Hi, good afternoon. Thanks for having me on the program today.
Good to have you. So while the celebration over there in the United States, because the default has been averted, what are the immediate implications for Africa?
Oh, well, I would say generally very positive in the short term. And this is because the way of looking at this is thinking about what would have happened if there were to be a default in the US, or if the debt ceiling agreement hadn't been reached. So it would have been very bad for Africa, really. And this is because we would have had a very sharp decline in stock markets. We would have seen significant capital outflows from emerging markets, including in Africa, and this would have exerted extremely severe downward pressure on currencies in the region. We've already seen a lot of depreciation of some major currencies, but it would have actually aggravated this trend. We would have also seen rising interest rates quite quickly around the world, a very sharp recession globally, and again, this would have increased debt servicing requirements or debt servicing costs for economies in Africa. So certainly it would have been really quite bad for sub-Saharan Africa. What we are expecting to see is an improvement in sentiment towards emerging markets, including emerging market currencies, a little bit less pressure on them, a little bit less strength in the dollar as sentiment towards the rest of the world improves. So certainly from a financial markets perspective, it is a positive development for sure in Africa.
So I noticed you said in the short term, is that also the condition for a long-term perspective?
Well, I mean, certainly, again, it is also quite positive for investor sentiment towards Africa over the long term. What we would expect to see is a bit more certainty for investors and businesses operating in Africa, investing in Africa. And this is because they don't have to worry about extreme currency volatility and extreme disruption to their borrowing plans or their investment plans. So less dramatic increases in interest rates, for example, less dramatic increases in debt servicing. So we could say that there's a bit more visibility and clarity over what will happen over the next 6 to 12 months. Having said all of that, it's worth remembering that we are still expecting the US Fed to maintain relatively high interest rates. We're not expecting a cut until the beginning of next year in the US's interest rates. And so this does mean that currencies in sub-Saharan Africa will remain under more pressure for the foreseeable future. We are also seeing public finances in Africa remain under pressure, as you just mentioned, the deal in the World Bank deal in Kenya. So positive over the longer term, but still there are a number of challenges that African economies must deal with.
Yeah, so, but does this disturb the commercial relationship with Africa, between the United States and Africa?
Yes, so, well, I guess there's a question we can ask here as well, is about whether or not the status of the US dollar as a global reserve currency, including its use in Africa, is going to be challenged. What I would say is that the avoidance of a default, or this debt ceiling agreement, means that the prospects of African countries moving away from the dollar as a global reserve currency is incredibly limited. We think those views are overblown anyway, but it does mean that Africa's commercial relationship with the US is probably going to get a bit stronger. We do expect it to provide Mr. Biden with an opportunity to renew his drive to improve ties between the US and Africa, and this will take the form of his support for the African Continental Free Trade Agreement. We also would expect him to double down now on trying to sideline Russia's influence across the continent. So Russia is trying to expand its presence militarily and economically in Africa. So we would expect, now that a debt ceiling agreement has been reached in the US, Mr. Biden will kind of double down, will have the capacity to double down on building relations and raising the US's profile in Africa. So certainly we would expect there to be more investment and greater trading ties. So certainly quite a positive from that perspective.
All right, positive indeed. Thank you so much, Max. But I guess it's about time that Africans also start looking inwards, and not wait for help from,
Of course.
the West. Thank you so much and have a great weekend.
Thank you, you too.